We have a big momentum trade on Wall Street, but we saw Nvidia close the day in the red. At the same time, we saw the Nasdaq briefly hit an intraday high before closing lower. What does this all mean for the strength of that momentum trade and the strength of the rally overall?
Well, if you look year to date, there's no question that Nvidia has been a massive part of what is happening in the market, and the market dynamics are being driven by three stocks, effectively Nvidia, Meta, and Microsoft, and on the downside by Tesla and Apple. So those five stocks explain most of what's happened over the past year to date. However, if you look just in the last month, and in fact week by week, you see that the market itself has been broadening. And so yes, Nvidia is definitely a huge contributor to what happens. It is actually becoming less and less of a contributor modestly, and that's healthy for the market.
All right, so you're saying it's becoming less and less of a contributor. There is some evidence to that. Last week, we definitely saw a rotation. The Russell hit a 52-week high. Utilities, the best performing sector, that's a classic defensive trade. If we continue to see this weakness in Nvidia, do you expect to see more of investors going towards this more defensive trade?
Well, I think it's a couple of things that are going to feed that. One is the outlook for when the Fed is going to cut. Two, the outlook for inflation that will feed that. And finally, what happens with growth. And at the moment, you know, economists have upgraded their expectations for growth up to 2.1%, which is pretty good. It's pretty much a soft landing. It's as soft as you can get. If that comes to pass, I think that the world is a very different place than the world we were in. However, if the Fed decides to wait on their cut, you know, there's a lot of uncertainty still in the market, so that defensive trade could start to take hold, but the market itself is broadening.
You know, you talk about some of the uncertainty. I feel like a few weeks ago, maybe a few months ago, we felt like inflation was definitely on the right track. Then we heard Jay Powell say, well, it seems like it's on the right track, but they need to see more evidence. And now you're in the camp of believing that we're going to see a slightly hotter than expected inflation report tomorrow. So if we do get a hotter than expected inflation report, what happens then?
Look, I think that the market will get a little more defensive, without a doubt. If we see, we already saw a hotter than expected PPI, and expectations for CPI went up dramatically after that. They've basically been range bound all year. Economists thought we were falling, and then they thought we would go back up. The expectation now for end of year is 2.7%, which means that we could easily get a hotter than expected number in the next inflation print. If that's the case, Powell is going to move slowly, and the market has already finally come back to thinking that 3 rate cuts now are in the you know, up for this year. That was down from 6, which is what we believed at the beginning of the year. And if that is potentially threatened to be even less than that, okay, then we could see the markets just continue to wonder about whether or not 23 times PE makes any sense.